This is the briefing for Wednesday, March 9th. I want to begin really by summarizing the briefings that I did this week so far, especially on Monday and Tuesday. I need to review what's happened in the stock indices because I think it's very important and could give us an indication of what to expect in tomorrow's trading. If you remember from Monday's briefing, I talked about the fact that the stock indices were at a point of being extremely oversold. And this is where we were in terms of my overbought and oversold indicator, this being the NASDAQ and this being the NYSE. And I said in that briefing that based on that we had to anticipate that at least short term, the higher probability was we were going to see some type of rotation back up or a pause that would work off this oversold condition and then allow for another thrust to the downside. I also stated that intermediate to longer term, I felt like the indices were at a point where we could see a really big thrust to the downside, and we could even see something in terms of at least a 25% or more correction to the indices. Now the NASDAQ is, I believe, at a 20% correction, but the S&P and the Russell are yet to get to that point. Now, with that in mind, let's go back to Tuesday. And in Tuesday's trading, we got this rotation back up. Now, you can see here that we appeared to make a lower low below Monday's low, but we did get this rotation back up. And then, of course, the S&Ps, the spiders began to sell off. This is the spiders, this is the Qs, and this is the Russell. Now, what happened, there was somewhat of an intermarket divergence that occurred in Tuesday's trading, yesterday's trading. And I discussed this in last night's briefing, that the fact that the S&Ps or the spiders appeared to want to take out the low, this low here, but the Qs or the NASDAQ was far from it and the Russell was far from it. In fact, I discussed the fact that it appeared that the NASDAQ and the Russell were telling us this was going to be a three-step counter-trend rotation, and the spiders were telling us that it wanted to trade lower in today's trading. So basically what happened in today's trading was that the Russell and the Qs or the NASDAQ won that battle. And if you look at this, and you know if you've listened to these briefings for a while, counter trend rotations develop in different types of patterns. And periodically they will develop into a three-step counter trend move. One of the characteristics of that three-step counter trend move is a lot of times the first leg of that move will be equal to the third leg of that move. So looking at the spiders, if we look at this as the first leg, this is the second leg, and this is the third leg, then we can look at and see, well, where should this leg end? And in today's trading, I was watching this and watching it very carefully. Now, the equality of leg 1 to leg 3 is not certainly necessary. It doesn't have to happen, but it is a characteristic that I've seen periodically in the stock indices and even in some stocks. So if we look at this, the length of this leg 1 and equate it to what the length of leg 3 is, this projected leg 3 in the spiders to end at 428.34. The ending of this was, I believe this was, the high was 429.51. So you can see that we came within 1 point in the spiders of reaching that point before we started to see some type of retracement. In the Qs, this leg being equal to that leg projected the Qs to come in, or this high to come in at 336.47. The high was 336.38. That is uncanny. And in the Russell, this leg being equal to this leg came in, I believe this is the high here. That high came in at 201 that projected the Russell to go to 200 and 200.9. So that all of those numbers have been reached basically in all three of the indices. Interestingly enough, the intermarket divergence, short-term intermarket divergence still exists because you can see the Russell closed near the high of the day, the S&Ps and the NASDAQ appeared to have some sort of sell-off. So this would give us a higher probability that we should see more downside movement in tomorrow's trading. Also, we reached a point of being overbought in the NYSE and extremely overbought in the NASDAQ. So those two things give us a higher probability that the rally that we've seen for the last 2 days should be complete. Now, if we look at some of the other characteristics, you can see that this is a fairly good thrust to the downside, and this appears to be counter-trend move coming in right at this rotation, where this rotation is. Also, if you look at what's occurring with volume, volume is falling off. That's another characteristic of a counter-trend rotation, is there's not much price appreciation and working off an overbought or oversold condition. Looking at in terms of breadth was fairly strong. It was stronger today than it was yesterday. That was positive for the rally, but it was not attracting new buyers. And you can see this for the way it stalled and the way it more or less just kind of had a rounded top in going into the high for today. Looking at the NASDAQ, same thing. NASDAQ volume has absolutely collapsed on this rotation back up, but breadth expanded and expanded nicely, but we did not get much price appreciation. That's because volume was very low. We were not attracting new buyers. And the same thing occurred with the Russell. Russell volume was extremely low. So what can we expect now? If this rally is complete and we do see the beginning of more downside in tomorrow's trading, the important support and resistance right now, you can see this is the spiders on a daily chart. We're right at this 427 level, so it's right at support and resistance. What happens here is just going to be really important. So using the extremes of today would give us the potential for the next greater degree time and price move, suggesting if we trade below today's low, we're going to see this low taken out, and we're going to see the February 24th low taken out. I still believe that there is a higher probability, at least at this point in time, that this low will get taken out. Now, that can change. That analysis can change if we were to have a continuation of the rally tomorrow and we see the market internals beginning to confirm that. In other words, breadth strengthening over what it was in today's trading and volume beginning to increase. So basically, this was a day, you can see that there's a selling tail here and a buying tail here in today's trading. That basically tells me that neither buyers nor sellers took control, although we were up above yesterday's low. So that tells me that this was counter trend, and unless something were to change overnight that would change the perception on the value by traders, we may see a higher high, a slightly higher high at the open tomorrow. But if we do, watch what happens with market breadth, because if breadth is weaker than it was in today's trading, that's going to suggest that you'll see a trade up here, and then you'll see rotation back through the range. Watching what happens at 425 to 427, that's the next level of support. Looking at the Qs, you can see the same thing, rotating right around this 334 level. That's the low of January 24th. Looking at the low of February 24th, using the same thing, the extremes of today for trade location, that would give you the next degree move. The problem is anything can happen in terms of news that can change the perception of value, and we could see a gap in one direction or another in tomorrow's trading. But based on that, still we just do not have, we have high volume on the rotations to the downside and very low volume on the rotations back to the upside. And finally, the Russell, you can see, is basically in the middle of this area of rotation, and really using the extremes. You have upside resistance around the 205 area, and then downside support coming in at 190 down to the low of February 24th, which comes in at the 188 level. So basically, everything that we talked about on Monday and Tuesday in the briefings, going from oversold to overbought in a rally that did not have much price appreciation in terms of the degree of the downtrend, and that we have reached the equality settings of that are similarly characteristic of a counter trend rotation, and we have reached those resistance points, would suggest then that this rally should be complete. Now, with that said, once again, I have to hold out the possibility that they're going to try and open this thing tomorrow higher and draw in more buyers. But if breadth is weaker, that's going to suggest that they will not be successful, and you'll see rotation back through this range, or we could see the beginning of another move back to the downside. Now, watching what's important here, if we trade through this low here, this is a 15-minute chart, so if we trade through the last 15 minutes, the next level of support is going to be at the gap for today. If that's traded through, the gap will get closed, and that puts us back into the area of the low from Monday. That's yesterday's low. I'm sorry, not Monday's low, but yesterday's low. So watch what happens very carefully. It's going to be a very interesting day in tomorrow's trading. Have a great night.